Hey, good morning, everybody. Happy Thursday. Let me get a little adjusted here. Um, Interesting market day so far, right? We're rolling about middle of lunch here in New York time. And the Dow is down a little over 100 points towards the open, and it's kind of recovered a little bit. It's down about 50, 60 points right now. The S&P, right, started out red, and it's gone green now. It seems like Apple's getting a little bit more bullish, a little bit more bullish. It's so eclectic right now, that Apple trade. One day it's really bullish. Actually, it's like for half a day it's really bullish, half a day it just gets sideways, and so on and so on. Apple's got earnings next week. We got a lot of fangs next week, right? The rest of the fangs, actually, your Facebook, Amazon, um, and Alphabet, which is Google, Goog. So we took up a little earnings play on Apple this morning. We took advantage of this kind of middle fiddle that it's doing right now. So we've got the contracts for tomorrow, which are not looking good, but we don't stop trading, guys, just because of a loss. So we opened up a little Apple trade. Now, the stock we've talked about before was a stock of the week, ET, Energy Transfer Limited. That's having a great morning this morning. For you guys that might have picked up some, congratulations. It's a dividend pair, and it's a nice little opportunity under $10 a share. The other one that's doing real well this morning for us is Ford. Ford got a huge upgrade from Deutsche Bank, and also to a recommendation as a trade going into earnings and their product show. So Ford's having a good morning. Across the board, we're doing okay with our energy play, but we've got a couple months on that one. Really, all we've got right now is the Apple play we're looking at on the short term. And we've got Ollie out to about the middle of next month, too. But that one's really gotten bullish on the chart. Had a great start again this morning, right? It was up about $1, and then it kind of faded the rest of the since then. But the chart's still very bullish and stuff. So look, guys, we'll just do a quick update this morning. It's Thursday. The market's kind of flat. Go enjoy your day. Unless you're day trading. Something we talked about was, sometimes there's downtime, right? We set up plays, we're waiting for plays to come through. There's a little bit of downtime. So as a group, we kind of started doing some cryptos together. So we're having fun with it. And that's another advantage of being a member in our program, is that, we don't keep our one tool in our tool belt. We like to have multiple tools, and if it's an asset and it's a profitable opportunity, we will take a shot. And we're actually doing well. And here's the amazing thing, guys. We always try to keep things accessible for members across the board. We don't ever go in there and say, oh, we're going to start a crypto portfolio with $20,000 and da da da. What we did was we took $200 and we started with that. Let's see if we become crypto millionaires. Same thing we did with our growth portfolios, our stock portfolio that we taught members how to build a base portfolio. We started that with $400. That thing's almost $600. We started it in July. I think we made one set of trades to set it up, and we just rolled the price and the dividends. And that's how easy it is on your passive income. Look, guys, if you're not getting mentorship, if you're not getting somebody sitting beside you that's trading the same things, take a look at that video. That's the feature video on the site. And now, look, guys, let's see how things shake out. We had good earnings this morning. But the market's still a little fugly. It seems like it's kind of working things out. We had a great labor report this morning, right? Again, remember what I've been telling you about labor. When you start hitting that growth spurt for reopening, you want to see your labor, which has been very depressed for a whole year, right? The first thing you want to see is you've dug yourself a labor hole. You need to stop digging. That's your new claims. Remember, that's your spigot, right? If you turn that off, you don't have anything filling your continuing claims, and you can start working that down. We got our second week of those new claims going down real strong. Just about 34,000, I think it was, on the continuing claims, which kind of makes sense, right? Things are opening up. There's still some apprehension amongst the labor workers, whether it's safe to go to work. And you know, there's just things discombobulating, getting people off unemployment. You know what I mean? A lot of people argue the case that the whole unemployment structure right now through the last stimulus is what's hurting the getting people off unemployment. You know, whatever your argument is, the numbers, there are proofs in the pudding with the numbers. And, you know, it's good. It was a good labor gain. The housing section got rocked a little bit. Right. We had that good mortgage report. Talk about an eclectic recovery, right? We talked about that mortgage report from a day or two ago, where it was blowout, right? Great demand for mortgages and things like that, and rates at you know what I mean, at historical highs for a long time. But then today we had the housing starts come out and it was ugly. We're not in any really housing stocks right now. One of our favorites, though, if you guys are looking for one, is BLDR and also BZH, if you want to take a look at those. BZH a little bit cheaper. BLDR, I think it right now is about 30-40 bucks. BZH should be around that $10-15 range. I haven't looked at them for a while. Other than that, guys, let's call it a Thursday, and let's see how we roll into some of these really, really big earnings. We've got a couple after the bell, but really the tech effort will start off next week, and we'll start getting, you got your Apples and your Facebooks and stuff like that. So it should be a lot of fun. Rest your legs right now. Other than that, guys, the tone of the country is kind of a little melancholy right now, right? We just came off that big court decision, and there's some other things in the news that are kind of causing distress and stuff. So, but the news cycle has been pretty tame right now. The big fight, right, in Washington right now is, do we end the filibuster? And of course, the effort to end the filibuster is so that we can name a 51st state, which would be DC. The District of Columbia. You know, I've been watching that all my life, guys. I'll share that with you guys. It's 60, you know what I mean? I've been listening to back when I was young. The big talk was about bringing DC to statehood, but also Puerto Rico. You guys older, they might remember that, right? There was kind of a push, man, to give Puerto Rico statehood and DC. So it's not a new argument. It's definitely long in tooth, but it didn't make sense then. It doesn't make sense now. That's the fact of it. So look, other than that, guys, let's stay tight in our trades. Don't forget yesterday, Playboy, right? We did Playboy for the stock of the week. Went a little speculative, and that's based on NFTs, right? And there was some good NFT news this morning. And Playboy's actually having a big morning this morning. If you actually picked up some, congratulations. It looks like we're off to the races. Other than that, guys, let's call it a day. I'll be back tomorrow with another market update. Now, look, guys, going down the line, we're thinking about with our, you know, we do the stock of the week every week. We try to give you a great idea that's a great addition to any portfolio. We're thinking about doing a crypto coin of the week. So, you know, the great thing about crypto, guys, is it's an amazing world in the sense that every coin you look at has a project or it has a focus, and it's so fun to just read about those. Even if you're not playing the cryptos, just the minds behind the project, the fire behind the project and things like that. It's a lot of fun. So we're debating whether or not we might do a crypto coin of the week just to talk the stories. The stories are so fascinating. Other than that, guys, crypto's been kind of subdued too, right? Since the close last Friday. The market seems like it's shaking off those doldrums a little bit, but you see it too with the stock market, right? It'll start to get its footing, push a little green, and then it just kind of comes back. And we're in this channel going sideways right now. Crypto's kind of the same way. You see it with Bitcoin, right? It pops back up to that 55, high 55s, and it comes back down to that 53, mid 53s. And it's just kind of gyrating in there. The one bright spot for cryptos over the last week has been the Ether coin, Ethereum. Uh, Look, guys, I don't want to keep you guys for a long time on a boring day like this. Like I said, we opened up some Apple contracts. We opened up in the money, and we opened up about a week from now, guys, just to catch that earnings run. We think there's going to be a good earnings run. We haven't really had, guys, despite the great earnings and stuff, and Netflix kind of played a role in this. You look at it, we've been having great earnings, but one of two things are happening here. People are investors or traders or money's kind of looking at these good earnings like it's expected. We're at that point of the recovery where earnings should be good. So unless it's something spectacular and really, really rockety, it's not getting a lot of attention. But we think as we roll into some of the more mainstream earnings, right? I mean, banks and stuff, yes. I mean, it's institutional money. It's very mainstream and stuff, but nothing gets people excited like tech, right? So let's see how that shakes out. Netflix kind of put a damper on that, right? A couple days with that subscriber miss. We still don't think those Netflix numbers are bad. If you're a Netflix holder and you are asking us, we'd say keep the course. There's nothing wrong with Netflix. We saw a lot of articles where people were arguing that actually Netflix has been okay with content and stuff, and we don't agree with that at all. We're Netflix watchers, and we watch a lot of streaming services. Between myself and the trade team. And you know what? Netflix, I mean, you're watching a lot of the same stuff over and over. Really, Disney Plus had a lot more fresh stuff, and it was just really bringing other stuff to market, right? That other people couldn't, in particular, Mandalorian, right? So we're not buying into that. We think that balance sheet was nice and strong. We think that revenue was nice and strong. And we think that subscriber low will rectify itself over the coming quarters. And if you've been in Netflix for a while, or if you've watched Netflix for a while, every now and then they've had these subscriber slumps, and they always come back from it like a banshee. So for you guys that own Netflix, we don't own Netflix, but if you do own Netflix, we say stay the course. There was an interesting article, I'll close with this, on CNBC. What would $1,000 you put into Netflix in 2011 be 10 years later in 2021? I gotta think what day it is. Is it that slow in the market? But the result was, I think it was $12,000. So, you know what I mean? Stay the course, man. Nothing beats patience. Nothing beats deliberate trading, right? And discipline. So, okay, guys, you have a great Thursday, okay? We'll see you from the Starship Financial Reboot tomorrow morning.